Now, if you feel you've been paying too much taxes, this tutorial is for you simply because I have 6 key methods that can potentially help you reduce your taxes moving forward. And let's be very clear, if you're watching this and taking action as of right now, in 2020, the effect will come in the filing season in April 2021. But if you're watching this in 2021, whatever you do, only show the effect in April 2022 when the filing season actually comes. Now, if you stay towards the end of the video, I'll actually share with you 2 more personal tips. One is if you are self-employed, what should you actually prioritize in terms of contribution? And secondly, if you have access CPF OA, I'll be sharing with you a particular fund that I think is very interesting that you can use using your CPF OA to get invested into. So if this topic interests you, continue watching on. Hi guys, welcome back. Now let's dive into things right away. And the first one regards topping up for your family members. The most obvious one for me is to contribute to your own parents' retirement account. My guess is they are above the age of 55, which means whatever they have in retirement account, if you contribute to it, you can potentially get a tax relief. Now this infographic really sums up quite a few things. In doing so, you actually increase your parents' retirement sum. And the most important part is whatever you have done, whatever you have contributed does not affect any government subsidies that they are already entitled to. So now your question is, will your parent actually be entitled, or are you eligible to contribute to your parents' retirement account? The key answer is let's go and find out whether they have the full enhanced retirement sum within the RA itself. And that amount, take note, is $271,500 as of 2020. That means if your parent has less than that amount, $271,500, you can actually contribute up to $7,000 and get tax relief while boosting their own retirement account itself. So that's a very powerful method. And just in case your parents has very little inside their retirement account, take note of this. As of now, there's actually this matched retirement savings scheme, MRSS. And if you contribute to their retirement account, government is willing to match up to $600. And if your parents are within this age group qualifying, 55 to 70, as well as having less than the BRS, the basic retirement sum of $93,000, government will match this amount. Take note of the other criteria also, not having a monthly income of $4,000, as well as staying in HDB because it covers all HDB flats, the annual value of residence. So this MRSS is another benefit that ties in together when you contribute to your parents' retirement account. Now, there's actually another alternative that you can contribute. If you have a sibling who's not working or spouse who's not working, you can actually contribute to their special account and also derive tax relief for yourself. Now, take note of this. The qualifying criteria is they must not have more than $4,000 per year in terms of annual income. Very, very low amount, but if they are totally unemployed, definitely this is an alternative you can consider contributing. Because simply we have to take care of family members. That's each and every person's responsibility. So if you have a spouse that also will grow old with you, it makes sense to definitely contribute to your spouse's special account. So take note of this alternative, and again, the relief is up to $7,000. Now, points 2, 3, 4 regards contributing to yourself, and point number 2 is actually contributing to your medisave account directly. Now let's clarify things. I'll pull up this infographics for you to see. If you contribute to all 3 CPF accounts, it is not taxable. You must contribute directly to your medisave account only with cash, then it is tax deductible. Now do also note there's something called a mandatory contribution, MC, and this amount is $37,740. So do go and check in your CPF when you log in whether you have actually reached that cap. If not, you're not eligible for this voluntary contribution. And the other thing to take note of is also if your medisave has reached the basic healthcare sum, BHS, of $60,000, then you're also not eligible to do voluntary contribution to medisave account. Now, point number 3 is actually the retirement sum top-up scheme, RSTU, and it's already been shown in the infographics. So let me draw your attention to that point over there. On the right side, what do you see? You can actually contribute to your own special account under the RSTU, and there's a tax relief that you can get of up to $7,000. So now, there's a eligibility criteria, and that is your special account must not have hit the full retirement sum, and as of right now, it's $181,000. So if your special account does not have that amount, you are eligible to contribute up to $7,000 and you will get a tax relief for that. Now, point number 4 regards SRS, Supplementary Retirement Scheme, is something that I've been contributing myself also personally for the last few years. SRS is something I've covered extensively on this channel. You can look for previous tutorials, and one in particular is this over here, a 5-minute guide on SRS using a simple formula. In that video, I'll share with you when you should contribute to SRS, as well as the caps, the rules to it. So do look for it. I'll leave links below just in case you should see it for yourself. Now, SRS can be very easily opened these days through iBanking portals. And I use OCBC. So a simple snapshot shows you how easy it is to open an SRS account with iBanking login. And I believe DBS and UOB have a similar structure also. So next question is, what are benefits contributing to SRS? There are a few key parts that you should understand. SRS actually increases your total personal reliefs. And for Singaporeans and PR, the cap is $15,300. For foreigners, it's $35,700. This example from DBS actually shows for someone who is a Singaporean or PR, drawing an employment income of $102,000. With a SRS contribution, the maximum amount of $15,300, there's a potential tax savings of $1,071. So again, if your income level is even higher than that, do look up. There's quite a lot more in terms of tax you can actually save. So your next question may be, which is actually better? Should you contribute to SRS or should you contribute to RSTU and add on to your CPF Special account? Now that really depends on quite a few things, and in particular, if you can contribute to both, go ahead and do so. But if you really want to find out what are the pros and cons, this is a quick summary that I have for you. For CPF Special account, when you top up, do note, if you don't have the full redundant sum, you cannot cash out anything. You have to wait for it to flow to CPF Live and then cash out from there. But if you have the full redundant sum, you may potentially cash it out at the age of 55. On the other hand, SRS is meant to be taken out only at the age of 62. But in the meanwhile, if you really do need, you can actually do withdraw it out with a penalty. Now, when it comes to returns also, they are of a different profile. CPF Special account gives you a 4% guaranteed rate and very few investment choices. But SRS, if you want to invest it, there are a lot of investment choices and potentially you can get a better return than 4%. So those are a few key parts, and I have a particular article on that specifically, which I'll leave also in the links below. With that, let's move on to the next few methods, which also for someone who's a foreigner can also adopt. Now, point number 5 regards donations, and before you get there, smash a like so more people can see valuable content like this, and even subscribe. Press on the subscribe, inviting you to join our family because we'll be launching videos every week to help you in your financial journey. Now, when it comes to donations, there are quite a few places you can donate. They are approved for you to get a tax deductible, and this is a quick list. Over there, you see Children's Cancer Foundation, you'll see Club Rainbow, etc., etc., and NKF, National Kidney Foundation, is also part of that list. I've donated to NKF myself, and this is my own snapshot, so I do actually get a personal deduction in terms of donations. Now, to show you the math of how things work, this is actually a snapshot extracted from IRAS itself. For someone with an income of $100,000, donation of $10,000, donations each dollar, $2.50 becomes the tax deductible. So what it goes to show you is the assessable income is reduced by $25,000 and becomes only $75,000. Now, so if you haven't donated before, do look for organizations that are qualifiable, donate and get yourself some tax relief. Point number 6, in my opinion, is not mentioned frequently enough. Do you know that when you go for approved courses, you can actually use those fees to net off against your chargeable income? It's true. And the cap is $5,500. So do take note of that. And as always, when you go for courses, there's bound to be examinations. And if you're not someone very good with examinations, do check out this YouTuber, Ali Abdal's channel. In his channel, he shares how to study effectively. And with that, I've actually something interesting to propose to you. Now, this video is sponsored by Skillshare. If you're looking for new skills to upgrade yourself and find better work opportunities, absolutely look for the masterclasses within Skillshare. In particular, if you are a student or going for any examinations yourself, look for Ali Abdal. Ali Abdal is one of the best YouTubers for productivity as well as exam handling tips, and he actually has his masterclasses in Skillshare itself. Look at this over here. He's exceeded expectations for his students. So, fantastic topic, and I believe he's definitely going to be able to value add to you. To learn more on Skillshare, the first 1,000 to click the link in the description below will get a free trial of the Skillshare Premium membership. Now, because you stayed here, I have a bonus for you. That is, if you're self-employed, always contribute to your SRS before contributing to CPF. That is a strategy that I do. Simply because of this, when you're self-employed, your income is in cash, correct? And of course, you have your mandatory medisave contribution. But when you have your cash, you have actually the flexibility to choose what kind of avenues to park your money towards or reinvest into your business itself. Which means SRS having that potential flexibility of withdrawal is more important than contributing to CPF, because CPF, when you contribute there, the amounts are locked up. So do consider that and I have a full guide on it, which I'll leave links below. This is a thumbnail for that guide. Look for it because it really expands on the topic of why a self-employed should contribute first to SRS for tax relief over CPF. And if you're looking for an investment alternative to get returns on your CPF OA, I have also this previous video that I'll introduce to you. This over here is United Global Quality Growth Fund. This fund has beaten S&P 500 performance and is CPF OA approved, which means you can actually get better returns on your CPF if you have the right risk appetite and the right investment time frame. So with that, let me introduce you to that video. I think it might help you maximize your CPF OA a little bit better. And again, if you have comments and questions, leave them below. So with that, I'll sign off and see you in that video. Take care and goodbye.